This trading strategy removes guessing from the equation and will have you making money regardless if the market goes up or if it goes down. Let me show you how it works. So the first thing we're going to do is zoom out as much as we can. I have the monthly chart open. So each candle represents a month. And as you can see, this chart is an extremely bullish chart over the long run. Now that we've picked which stock we're going to trade this strategy on, we're going to go to the option chain. We're going to click buy and we're going to click call. And we're going to look for an option that's at least 1 to 2 years out. So in this case, we're going to go for the one that's 290 days away. So then to be extra safe, we're going to pick an option with a 0.8 delta, which means there's an 80% chance it should expire in the money. And also there's an 80% movement correlation with the stock. So remember, when you buy an option, you want 100 shares worth of movement. So when you buy something with an 80 delta, you're getting 80% of that movement for less than half the price. So we're going to pay $2,200 for this leap. Meanwhile, 100 shares of this stock will be $5,800. So we're paying almost a third of the price for 100 shares, which is giving us some extreme buying power. So now here's where it gets really fun, is that $2,200 is giving us 100 shares worth of power. So we can use that 100 shares to now sell calls and collect passive income. So as you can see here, we can collect as much as $300 in a single week, but we're gonna go a little higher because we wanna be safer. So the same way we bought with an 80 delta, now we're gonna sell calls within the 20 to 30 delta. So basically the exact opposite. So in this case, we'll be able to make $110 every 10 days. Now, we have about 300 days till expiration, which is about 40 weeks. So if you figure $100 every 10 days, that means just by covered call income, we should be able to at least break even on this trade. And here's where it gets the most fun of all. So if you look at the option we're buying, it only needs to go up about 10% from now up until the next 290 days to be break even. And if you look at the stock we're trading, it can go up as much as 8 to 10% in a single day. So we only need 10% from now up until next January to be break even on the option we buy. And of course, if it continues to go down, right, and just shoot down, then we should be able to make all of our 2,200 back from just collecting calls. So either way, we should win, right? We're either gonna win from collecting calls and creating passive income, or win from the appreciation. And that's what makes this strategy so great, is you have two ways of making money and not a lot of ways to lose, because if you sell the calls and let's just say the market shoots up, you can just roll higher and higher and just get more capital gains while collecting more passive income. And if the market shoots down, you're just going to collect covered call income, which should offset the 2,200 you're investing into this position. And if you want to learn exactly how selling options work, I sell options every single day. Comment the word strategy and I'll DM you my free guide to get you started in the world of option selling, so you don't have to worry about trying to predict the market or losing trades. Instead, learn how to always win and always